As I said, strong quarter 1 performance coming through for the bank. Looking at those numbers, really strong there. In terms of the recovery that we're seeing, this is something that you did highlight to the market. We are looking at a much better 2012 going forward. But what drove your first quarter performance?
Thank you very much, Samantha. Our first quarter performance was gross earnings went up about 33% to 54 billion compared to same period of last year. This is largely on the back of improved asset pricing and a strong liquidity position. Our net interest margins went up to above 6% during the period, largely as a result of repricing of assets in line with current market rates. Also, we saw significant growth in transaction volumes during the period, and that has also significantly helped in the growth of our commission lines. During the period as well, banking and non-banking subsidiaries contributed about 25% to our profit position. The results for the first quarter actually sets the tone for UBA's performance for the year. Clearly, the past is being put behind, and we expect to see increased revenue growth as we move ahead in the rest of the year.
Okay, so Q1 growth looking good so far, albeit off a low base. Looking at that loan to deposit ratio, it is still considered pretty much low at 44%. That is at March 2012. Your loans over the period only up by 2.6%. So what are your targets in terms of loan growth for the rest of 2012, and where are you targeting that growth to come from?
Well, in terms of loan growth, we have a very cautious outlook for loan growth in the year. We expect loan growth to be between 10 to 15% in the course of this year. However, this will largely be from loans granted to large multinationals and local large corporates, as well as the commercial agri sector. In terms of loan to deposit ratio, which you said was about 44%, we expect to see it rise up a bit as a result of additional loans being granted, but we don't expect it to be way above 50%. Given that our deposit growth targets are very aggressive, we expect to grow deposit by at least 20% during the course of the period. And already in the first quarter, we have seen a 10% growth in deposits. So we expect that our aggressive deposit growth will moderate the loan to deposit ratio. So we don't expect a very aggressive loan to deposit ratio going forward.
Let's look at your cost to income. Let's look at your cost to income ratio, because dropping substantially from where it was in 2011, 77.7%, now sitting at 65%, but still considered high amongst your peers, still considered high amongst by any standards in terms of cost for a bank. What is your target there? What are you doing to reduce those costs further?
Well, our cost to income ratio at the end of the first quarter 2012 was already at 65%, and we intend to sustain this particular ratio in the course of the year. And the key ways we think we'll achieve this is largely from expansion of revenues, and as well while keeping costs in check. As long as we're able to keep costs within inflation rates or far below inflation rates, we think we'll be able to sustain this 65% cost to income ratio that we've already achieved. We have permanently ongoing cost management and cost improvement initiatives within the bank and within UBA. We also expect to see in the course of the period that our shared services platform will continue to be strengthened and help us to achieve this particular cost to income ratio.
Of course, for all the shareholders out there, the big question is when we're going to see a substantial recovery in the stock price, really being hit over the past year, sitting with a price-to-book ratio of 51%. And of course, you're looking at a strong discount there. So what is going to excite investors and shareholders most? When do you think we're going to see a recovery in that share price? I know you wouldn't like to bet on that, but what would excite investors most about your plans?
I mean, if I got you right, you're talking about the current low pricing of UBA.
Yeah,
UBA as a stock, I think, has been significantly underpriced by the market. I think that's largely as a result of the rather weaker than expected revenues that we made in the profit that we made in 2011. However, today, given what the trend that we are seeing for Q1, we expect that the markets will actually properly price UBA. Today, we are at about 0.5% price to book. Peers or similar tier 1 banks are at about 1.3 average. So, I mean, just looking at that and even looking at our 28% annualized return on equity that we achieved in Q1, we expect, I mean, this will give you an indication of where to expect UBA price to be trading at, UBA share to be trading at. I expect that within the next couple of weeks or months, the market should actually reprice UBA properly. Today, UBA is a grossly undervalued stock, and the fundamentals remain very strong. Very good market analysts can figure that out very quickly, and I expect that things should turn around because the past has been put behind, and UBA is already forging ahead to reclaim its rightful place in the banking industry. Yeah,
Q1, 231% increase there in profits before tax. Strong top line growth of just over around 23%. Strong reaction from the stock price today. Well, we'll catch up with you in Q2. Thank you very much for that update today. Ugochukwu Nwaghodoh, the Chief Financial Officer at United Bank for Africa.